So the big question is this: how are real estate investors who don't have a ton of free time, don't have access to off-market deals, and didn't start life on third base, how do we grow a real estate business conservatively to support our families, finally leave the corporate rat race, and build a legacy? That is the question, and this podcast will give you the answers. I'm Ed Matthews, and this is Real Estate Underground.
This is the Real Estate Underground podcast show number 60.
Greetings and salutations out there in podcast land. This is Ed Matthews with the Real Estate Underground podcast. Welcome to the show. Today we have a really interesting guest. His name is Matt Kontoff. He is with Red Wing Capital, and he does for a living what actually I personally aspire to do, and that is have a little bit short of 1,000 units under management. And I can't wait to hear how he got there. And also he let slip, and when we were just talking previous dating record, that he also is developing some properties as well. So we're going to get into that as well. So Matt, welcome to the show. Thank you for your time today.
Thanks, Ed. Thanks for having me. Good to be here.
My pleasure. So, if any of you have listened to the podcast, you know that one of the really cool things about having a podcast is it's a really sneaky way to meet very accomplished people who are in your space, and get them to tell you all their secrets right here and I get to record them as well. So I don't even, just in case I miss something, I can go back and listen as well. So I am kidding, but thank you, Matt. It's really nice to see you again. You and I met on a LinkedIn challenge, if memory serves, right?
I think so, way back.
Yeah, way back, right? And so we now belong to a few of the same online meetup groups, and I believe that first off, I was probably stalking you for a little bit on LinkedIn, and then secondly, I probably, one of the things I'm prone to do in our meetups is to announce that I have a rapidly growing podcast, and then I beg for people's time to come and join us and bring their big brains and teach us all how to do what they do for a living. So thank you for falling into my trap.
You're welcome. There's so many stalkers.
Yeah. So Matt, yeah, right. Too many to even count, right?
Right.
So Matt, Red Wing. So tell me about your business and what you do for a living, and let's get into that.
You bet. So I started Red Wing about 2.5 years ago, and with the intent of growing it as a multifamily investment company. So since then, I've invested in 5 or 6 passive deals and a couple active deals. The passive deals have been in Southeast or Midwest. Mm-hmm. One went full cycle last summer, and wow. I almost tripled my money. It was
congratulations!
A great feeling to get that check and be a part of such a winning deal. So. Really,
yes, I'd love to drill into that. Can you tell us a little bit about the deal without giving us the missile secrets?
Sure. That was the first deal I invested in. I met a guy locally, organically in a meetup here in Boston, mm-hmm. and he was talking to someone else about syndication, and I was just sitting on the sidelines listening to every word.
Yep.
And eventually set up a meeting with him and learn more about his goals in the whole process. And he had this opportunity in Florida, and I did a lot of due diligence. I looked at comps. I did a Google Street View, and actually phoned a friend who lived in the area to ask them about, what's the growth story in that area, and it's a safe area. And I even called references to be sure.
Absolutely, always call references.
Yeah, so, and they all had glowing things to say. So I invested. It was a classic 56 unit value add, I want to say Class B deal. And they executed their plan. They raised the rents. They did their renovations, and someone came along and offered a ton of money. And they, of course,
they had enough to take it.
Well, they negotiated and got a little bit more.
Good for them.
So, yes, and then closed last August.
And so what was the timeline from the moment, from the point where you deployed that capital to the point where the deal was sold? How long did it take?
Probably, I want to, a little over 2.5 years.
Wow, that was fast. That's great.
Yeah.
And you tripled your money.
Almost.
Woo.
I'm a
That's
genius,
nice
huh?
That's a nice, yeah, right. Exactly. So tell me something, obviously you have you and I have similar backgrounds, and we're both recovering technologists. And,
Yes.
so I'm curious, what drew you to real estate as an asset class, as opposed to investing in other technology companies or, some other asset type?
I'll answer that question, but I got to close my door. Hang on a second.
Yeah, and we're going to edit this part out, obviously. I'll ask the question again.
Okay.
So Matt, obviously you and I are recovering technologists. I spent a bunch of years working for really cool companies that no one's heard of. And it sounds like you were at CenturyLink and a few others. And so, obviously you've got access to other technology companies and, I imagine other technology or other types of companies. So what drew you to real estate as an asset class?
So that's a great question. I think the answer is that my dad was in real estate, and he built 250 single family homes. He built a couple of apartment buildings in the Boston area, and he was able to retire early in his 40s.
Nice.
And I went to school for computer science and proceeded on a software engineering career. But on the side, I did some real estate investing. The first thing that he and I did was buy a fourplex in Boulder, Colorado. I was living in Denver at the time. So he put up the cash. I managed it, dealt with any issues that came up.
Yep.
And I ended up moving to California. I actually hired a manager. So I guess that was my first taste of asset management.
Yep. And
then we sold it a few years later for a profit. And now I will tell you, I wish I still held on to it because it's in a great location. It'd be paid off by now, and it would just be
spewing cash.
Yes.
Yeah. I tell people I regret just about every property I've ever sold. Like I wish I had them all.
That's what my dad said later on. Absolutely. We should hold on to everything he ever owned.
Yeah. I couldn't
So
agree.
A few years later, I bought a duplex and lived in a half, and then moved across town, and then later on bought another duplex. And I also have some Airbnb properties in Vermont where I go frequently to vacation.
Excellent.
Yeah.
So let me unpack all that, right?
Sure.
So you hired an outside property manager to handle this one project you were talking about. So talk me through what you look for in a property manager in terms of skills, capabilities, what they bring to the table.
You bet. So this fourplex I bought in the late 80s. So it was a long time ago.
Yeah.
But today I would look for a property manager that is, obviously you want to check the references, but you want a property manager that is familiar with the size and class of property that you're purchasing. So if you're purchasing a Class C property and you're going to do some value add, you want a property manager that's experienced in doing that sort of thing.
Right.
Obviously, if you mismatch that, you could get someone who's wildly overblow expenses or over update the units.
Yep.
I think, and then you want to check the references. You want to figure out how much it's going to cost you to manage. If they're going to charge you for adding a new tenant, or are they going to charge you for a renewal? I prefer to pay for renewals more than for a new tenant because it makes sure that they're focused on keeping tenants in place.
Yep. And that's a big one, right? Because obviously vacancy is very expensive because you got to do the turnover and the make ready work and all that.
Yeah.
If
you have some downtime.
Somebody happy and in place for multiple years, that they win because they don't have to move, and you win because it saves you a lot of money, right?
Yes, absolutely. So
in
then,
terms of managing the manager, So what else were you, when I assume you were meeting with them on a periodic basis. So, what were some of the things that you were paying attention to when they were sitting down and saying, okay, here's how everything's going?
Okay, well, so right now I'm part of an asset management team on a 43 unit property in Columbus, Ohio.
Okay.
And I helped raise capital for them and was fortunate enough to get onto the asset management team. We started talking where we have weekly meetings. We talk about, some repairs or issues that need to be done. And right away, there's like a couple things that I saw that I've actually had personal hands-on experience with. So,
Okay.
I really enjoy the asset management part of it because it's something I'm experienced with.
Mm-hmm.
And then our main focus right now is filling units. We've had a few vacancies, more than we had hoped, and so we're working on marketing and increasing our footprint in that regard. And we're actually adjusting some prices to get butts in the door.
Yeah.
Yeah.
So better to be at 90% or 95% of market price, and have a living, breathing human being who's in there enjoying the shelter that you're providing,
Yes.
rather than trying to get every single penny out of the market and waiting month after month with an empty unit, right?
Yeah, I don't want to price them and be the most expensive unit in the block.
Totally agree with that.
Yeah.
And so, what are some of the other things you're paying attention to? Like, obviously you have, break fix or repair and maintenance reserves, you have CapEx reserves. So what are you doing to pay attention to those? And, how closely are you managing those budgets as an asset?
So yeah, we have monthly budget reports. We, look at expenses and make sure there's no surprises. This is actually a relatively brand new building.
Nice.
So even still in a brand new building, we've had a few hiccups and
Sure.
repairs that need to be done. Some of them are still under warranty, but it's nothing major.
Right.
Yeah.
Right. And so, so that is an asset that you acquired that was existing. Let's talk about the assets that you're developing right now.
Okay. Well, I'm passively invested in 2 ground up developments.
Okay.
And those are progressing.
Multifamily or different, something else like
Both
straight?
multifamily. One's in Arizona and one's in Texas.
Okay.
And long term, I see a great return eventually, but I don't see any cash flow, which is
Right.
I got to have my cash flow.
I hear you, man. Yeah, it's hard to get cash flow out of a building when they're swinging hammers to build it, right?
Exactly.
Yeah. So how many units let's talk about Arizona, for instance. How many units is that?
I think it's around 230 units.
Okay. And the construction timeline for that? Like, how long is it going to take to build that?
I think we have another year or so to go.
Okay.
And they'll slowly start filling it up.
Okay. And so with development, is that a longer term, usually with a syndication, you're looking at, 3 to 5 years, maybe a little more than that, when there's an existing building. But with development, it's obviously a longer timeline. So how does that work in terms of the business plan? Like how long?
Definitely a longer time frame. It's definitely longer. You have it depends where you are in the process.
Yep.
You could just have raw land and be waiting a year just to get entitlements to start construction.
Right.
And then I'm sure people have heard recently that we've had a whole slew of construction materials costs spike, lumber especially go through the roof. So, and then in some places, some materials are just not available. So you just have to wait. But I think in general, the timeline is similar, all said and done, 3 to 5 years, the construction is complete. You've filled it up with residents and now it's ready to either operate as a business and receive the cash flow or sell to someone who's ready to pick up a Class B or A property for their portfolio.
And so with this particular property, is the plan to hold it or are you going to sell it?
Well, I'm a passive investor, so
whoever the operator is,
the operator is going to sell it, I believe.
Their plan is to sell?
Yes.
Excellent. Okay. So you're probably looking at a 5-ish year timeline. even. So, okay, that's great. Okay.
Yep.
And so, from a returns perspective, as an investor, I'm not going to ask about particular projects, but as an investor, when you are sizing up a syndication, whether that's ground up or it's an existing building, what are the kind of returns that you're looking for, both from a preferred perspective as well as IRR, internal rate of return?
So, in my view, the IRR is the most important number. It's a complex kind of future value of money,
Right?
But that really tells the tale of your real year-to-year return.
Yep.
So anything above 20 is a great return, a good return.
Yes, it is.
And in our deals, when we offer deals, we offer a 7% pref, which means limited partners get a 7% return, and then whatever else is split, usually 70-30 or 80-20 or something like that, with the majority going to the investor.
Okay.
So that's that's the approach I like to take.
Okay. And, now knowing that the market is starting to change, right? Interest rates are climbing up. I mean, the Fed just raised another 250 basis points a couple of days ago. What are you seeing in terms of how that's affecting returns, how that's affecting interest rates, and opportunity to find assets that cash flow?
Stay with us. We'll be right back.
A motivated seller just filled out your web form. If you call back within 5 minutes, you're nearly 4 times more likely to get that seller appointment. But delay your follow-up by even just 10 minutes? Forget it. You're toast. Ella Vista Connect calls that lead back in 60 seconds, qualifies them, and schedules your meeting. Find out how much slow follow-up is costing you. Free calculator at ellavista.com/underground.
Yeah, well, obviously interest rates are going up, so prices have to come down to make the same amount of profit and returns, and
Right.
not to make the cap rates go to zero.
Right.
So something's got to give, and it's usually the sellers are the last to jump on board to adjust their asking price.
Yeah. So are you seeing a lot of sellers starting to come to grips with the economic reality of
Not really, not yet.
Yeah, it's still lagging a bit, right?
Yeah.
Okay.
Yeah.
Yeah, it's funny. It's everyone knows the score except the folks trying to sell their deals.
Right.
I have these conversations all the time with sellers about, I'm happy to pay, May of 2021 price point if you're willing to give me May of 2021 terms. I would love a 3% return. If seller financing, you want to give me 3%, then yes, I can overpay for this property, right?
Yeah. Yeah.
But if you want me to borrow money at 6.5%, 7% and still pay you what it was worth 18 months ago, that's probably not going to work.
Yeah, when we had a couple situations where we put in an LOI, and then the Fed raised the rate like a half a point.
Yeah, world changes.
They came back and said, "Well, can you give us your best and final?" And I'm like, "I can't go any higher. The Fed just killed my deal."
Right. Yeah, I'm actually going lower if you'd like a better. If you'd like a
right, exactly.
Right. So how do you handle that, and how do you navigate that with when you're mid negotiation?
Well, so I do the underwriting. I have to keep my investors in mind.
Yeah.
The underwriting has to be solid and conservative, and if interest rates change the underwriting, then I have to make adjustments.
Yeah.
And I don't want to compromise and like trying to squeeze something out of nothing, and just doesn't make sense to do that.
Yeah. So, that's one of the things that I find as well is a lot of people, not you, thankfully, but a lot of people get emotionally involved in the negotiation. Like, I've got to get this deal done. And the answer is, no, you don't.
Yeah, that's true. The first deal is very emotional. It's hard to not get emotionally about it. Yes,
absolutely.
But you have to take it.
I get emotional when the check clears and is in my bank account and I can verify that, right? That's when I get happy. But up until that point, it's just numbers, right? It's
Yeah.
monopoly money until it's real.
Yeah. So you asked me about other development, and
Yeah.
I mentioned that I have a ground up development in Bali, Indonesia.
Really? Oh, tell me all about that.
Yes. So a friend of mine approached me. She actually has a jewelry business, and she built a factory in Indonesia on a piece of land. And she and her partner who lives there want to build villas. So the idea was to lease the land, because in Bali you can't buy the land. It's owned by local people, and you can't buy it. You can lease it long term, I think up to 75 years.
Okay.
So the idea was to lease the land long term, build villas, and sell the villas to expats or people who want second homes to live in Bali. And I don't know if you've ever been. I've never been. It's a gorgeous place to be. So that's how that started. And the goal was to build, about a dozen villas and sell them, and then build another dozen cottages, which we would hold on for short-term rentals.
Okay.
So we actually have a permit and license to run a hotel on this property. So we may even include a spa and a restaurant and common areas and pools and whatever.
Wow,
so that's actually pretty cool. Yeah.
So obviously the rules are different when you're investing internationally. What were some of the things that you had to consider, in terms of obviously the leasehold as opposed to buying the land, right? But what are some of the other things that you had to consider when you were wiring that chunk of cash, whatever that was, to the
big chunk of cash?
Yeah.
So I saw the numbers, and they looked reasonable.
Yeah.
And the model is very different. We're building a spec house, which will be done this month, knock on wood. And from that, we can open that up to prospective buyers who will come in and love the house and order their own house. I mean, they'll want to customize it one way or the other.
Sure.
Add a bedroom, add a pool, whatever.
Yeah.
And when they put down a deposit up front to purchase that villa, we'll collect enough money to build the villa. When it's complete, we'll collect the rest of the money of the purchase price, and then it's theirs. And they'll be leasing it as well.
Sure.
From us, sublease.
And then obviously you're going to sell those. I think you said a dozen or so villas. You're going to take that capital and then turn around and build cottages to then rent. So then there's your passive cash flow.
Yes.
Excellent. Wow, that's brilliant.
Yes.
Okay. And in terms of compliance, financial compliance with the government of Indonesia, is there any sort of nuances you had to pay attention to, or is it relatively straightforward?
We actually have a pretty good local lawyer there who's helping us get permits and licensing and such. And there's certain tax implications. So foreign investors have to pay a 20% tax, but if you're, I guess there's a local visa that you can get where you only pay 10% tax. So I think we're trying to get one of those, or we have one, I'm not really sure. So there's tax implications.
Sure.
And then, yeah.
But beyond that, it's pretty straightforward. It feels like.
Well, I don't know. It's a learning process because none of us have developed over there. And
sometimes, and it kind of leads me into my next question. Sometimes entrepreneurs are, and I'm this way, absolutely. Somebody will say, well, how do you do this? I said, I don't know, but I'm going to go figure it out, and I'm going to go do it and learn while I do it. Right. It's how I learned how to do multifamily. It's how I learned how to flip. It's how I learned, most of the things I do today. Right.
You just jump. I love that idea. I love that same way. Yeah. I'm like, I want to do this. I'll figure it out on the way.
Yeah. When I left corporate America, one of the things, I had a whole bunch of buddies that were like, hey, let us invest in your projects. And I said, you know what? Let me go break stuff first. Let me go break stuff. Let me build systems. Let me, figure out how to not make the mistakes I'm about to make. And then, we can talk about, participating in projects and all that. And
well, it's great that your buddies were gung ho to invest with you right off the bat.
A few of them were, yeah.
Yeah, that's pretty cool.
Yeah. Well, I mean, they're good friends, and I'd known them for a long, long time, and so that was helpful. And together we've done quite a bit of business. But yeah, I think you need to. It's the old axiom. In order to make an omelet, you got to break an egg, right? So I broke a lot of eggs in order to make those omelets, and you hopefully you get smarter with each challenge, right? Because every property, every project has a challenge, and it's just a matter of being clear-headed about it and thinking it through, and trying to make the best decision for your investors in the property with the information you have. And that's usually imperfect, but most of the time it works out, right?
Yep, it does. And there's a lot of unique problem solving along the way.
Yeah,
that makes it interesting.
It's one of the things I love about this business, right? Is that every day is different, every problem's different. It's not like we're in an assembly line and we're cranking out cars and it's the same.
For cookie cutter houses, for that matter.
Exactly.
Yeah.
That would bore me to tears.
Mm-hmm.
So when you look at other entrepreneurs and folks that, and I'm sure you come across these people like I do, it's like, oh, I'd love to do what you do for a living. And my question is always my retort is always the same question. What's stopping you? Go.
Yeah.
Right. So what do you think in terms of your experience with dreamers, like I call them, right? The folks that dream about doing what we do for a living versus, guys like you who actually do it for a living. What are some of those personality characteristics that separate the dreamers from the doers?
Oh, just wow. So it's easy to dream. I mean, I know people that think about this, they actually go to boot camps and they take the courses, but then the execution, it's a lot of work. It's not just like making a few phone calls and buying a building.
If only.
It's a lot of work. There's a due diligence. There's meeting with brokers, meeting with investors. You have to talk to all your investors to make sure that they're either accredited or sophisticated.
Yep.
And then, you're going to make offers. You may get, 1 or 2 out of 100 say yes for your LOIs.
Yeah.
And then you have to go do your due diligence, which means, go visit the property, hire experts to examine, the structures and the documents and.
Right.
Yeah. So and then the closing. So, there's a whole process for that. So
right. Yeah. And I think that, what separates a lot of people from, guys like you is that bias towards action, right? It's the ability to take, that concept and say, okay, I'm going to buy this building, and then diving in and making it happen. And you don't know all the steps, but that's what lawyers are for. That's what brokers are for. That's what mortgage bankers are for. That's, they'll walk you through the intricacies of each part of their process, right? But you just have to have the courage and then, the perseverance to see it through. Because you're right. I mean, the fact is that while this business is straightforward, it is by no means easy, right? I mean, there's fine steps, and we know what the steps are now because we've done it a bunch of times. But there are times where I have to remind myself, why am I doing this? Why aren't I? No, right? And yeah, that's why I'm doing this. Okay, financial freedom, right? Legacy, yes, got it. Generational wealth. Okay, good. All right, let's keep going, right?
Yep. Where's my vision board? Yep.
Yeah, thank God, right? Mine's right over your head, as a matter of fact.
Is it right? Okay.
Yeah. So let me ask you. I mean, you and I are similar personality types in that we're more than comfortable trying new stuff, knowing that we don't know every single piece, which is actually, given that we're both technology guys, engineers tend to want to know the whole picture before they act. So I guess that makes you unique in the world of engineers and technology people. But
I don't know. There's a bit of like analysis paralysis that I went through initially.
Sure, everybody
does,
right?
Yeah, just to be careful and not mess up. So, but
yeah, I've gone from somebody who needed to know every single piece before I'd act, analysis paralysis, to a guy who kind of remembers, okay, I'm going to make mistakes, and that's okay. And you're going to make mistakes, and that's perfectly fine. They're just opportunities to learn, right? It's the old Thomas Edison thing. He learned, 1,999 ways not to make a light bulb before he found the commercially viable way, right?
Yep.
So obviously a lot of what you've done is experiential, but I'm curious, leaders tend to be readers as well. And, these days that doesn't necessarily mean actually picking up a book. That could be audiobooks, that could be podcasts and YouTube videos and all that. And I'm just curious, how do you consume information? How do you kind of sharpen your saw, so to speak, and who are you paying attention to these days?
I do read. I have a bunch of books that I've been reading this year and last year. I do Audible books on tape.
Yeah,
play them at 2 times speed or 1.75 times speed. So
which authors, which books are you paying attention to? What are you reading these days or listening to?
Wow. Right now I'm reading, what's the next book? To edit this out. Capital Raising.
Oh, yeah, I just finished that. Hunter Thompson's book.
Yeah.
I was actually supposed to go to his Raise Fest, but I actually fell ill, so I didn't go. But did you go to Raise Fest as well?
I did not, no.
Oh, okay. I heard it was spectacular.
Yeah.
But that book is outstanding in terms of, managing the process and working a process to raise capital in a very predictable way, right? Which is big.
Yeah. And that's one of the things I'm working on this year, to get out there, to be less obscure, to have more investors that are willing to invest in great projects.
Yeah, along those same lines, another really good book for raising capital is Matt Faircloth's book, The Bigger Pockets. I think it's Raising Capital. I can't remember the title, but it's Matt.
Okay.
Matt's book is outstanding as well. It's the first one I ever read when I was learning how to raise capital.
I'm writing that down.
Well worth the 100 and 200 pages or so that it took to read. And I too am an Audible 1.75 2.0 times speed kind of guy. So I blow through books pretty quick, but it's amazing how the human brain can adjust too.
Yeah, and it really helps you. It makes you focus. If you're starting to wander, you really got to pay attention.
That's good when I'm walking around with earbuds, but when I'm driving, it's a little dangerous. So I tend to slow it down a little bit so I can multitask and not run anyone over. But so I'm curious, in addition to collecting information and reading books and all that, I'm sure you've had mentors. Obviously, it sounds like your father was one of them, right? But from a business,
well, not exactly. I mean, he retired early on in my software career. So he didn't exactly mentor me, but the guy I met in Newton has been mentoring me. I've been to 3 Rod Cleef events, 2 virtually, 1 in person. I've done some other.
I just read Rod's book, another excellent book.
Yes. Yeah.
So let me ask you, from an advice perspective, what's the best advice you ever got relative to our business, and who gave it to you?
The best advice,
or the most useful advice? Yeah.
I don't know. I don't have.
I always, it's funny. I had this guy that I worked for, Pete Black, and one of the best managers. And he always used to say, keep the main thing, right? So entrepreneurial ADD, I'm always like, ooh, shiny object. Let me go think about that. Right. And, the fact is that, from a real estate perspective, I'm a syndicator as well, and I raise capital, and I view I have 2 main jobs. One is deal flow, the other is capital flow. And anything I'm not doing, if I'm doing something outside of those 2 things, I'm not thinking about the main thing, right? The main thing is finding deals and raising the capital to do those deals, period. And then I hire people to do everything else. So, that's the way I think about it, but
it makes sense. I would add, don't compromise your principles and your numbers.
Yeah, it's one of the things that I see a lot of investors, and it's happening right now, as a matter of fact, is that the people that are in trouble or about to be in trouble are the ones that went counter to your advice, right? Which is, I'm smart enough to figure that out. I'm sure we could find another ways to raise capital or reduce those expenses. And sometimes you can, A lot of times you can't, right? And there's a buy box, the buy box and the whole concept of here are the principles upon which we operate our business, whether they're financial, operational, or whatever. They're there for a purpose. They're kind of your North Star, right?
Yeah.
And the reason that they're in place is to make sure that you don't deviate from them, because when you deviate from them, you're going to get yourself in hot water. So
Exactly.
right?
Yep.
Right on. So, okay. So let me ask you this: when we're getting towards the end here, and I've really enjoyed our conversation, Matt. Thank you.
Oh, cool. Me too.
Yeah. So when you are not building apartment buildings or investing passively in others or driving your own deals, what do you like to do for fun? How do you spend your time?
I'm an avid skier.
Okay.
I have a season pass at Mad River in Vermont. We have a house up there.
Ski if you can.
Yes. So I actually have a trip to Tahoe planned in a few weeks.
Nice.
Looking forward to that. They have so much snow. In summer, I play tennis, a little softball. I do some hiking. And, I fix stuff around the house. I actually enjoy that. I think I'm one of the very few people who actually enjoy getting their hands dirty and fixing that and fit this or fiddling with that. And
so you're the one. Don't ever tell my wife that, because I'm not that guy. I'm the other version of the husband, which is
you can pick up the phone.
That's what I'd like. That's what I would prefer to do. Yeah, but
yeah.
I was also I'm notorious for starting things and not quite finishing them. So it's one of the things that I'm sure my wife Patricia talks about behind my back. And I deserve it, so it's okay. So Matt, if somebody wants to learn more about you or your company, what is the best way to reach you?
So you can find me at redwingcap.com. That will give you an overview of what we do. And I'm also on LinkedIn. And my email address is matt@redwingcap.com. It's easy to remember.
All right. Well, Matt Kontoff, thank you so much for your time today. It's really good to see you, my friend. And
good to see you too. Thank you.
And I'm really interested in seeing how this Bali project plays out. So I'm gonna pick your brain every once in a while. Yeah, I'm sure.
Yeah, you and a lot of people.
Yeah, it's a fascinating project. I'd love to have you back on the show once you've kind of gotten into the cycle a little more, and let's do an update.
Yeah, I think the whole Bali project is what Rod calls a seminar. Definitely a learning process.
Yeah, absolutely. All right, Matt. Well, hey, thank you so much for your time, and I appreciate you, and it's good to see you.
Yeah, you too. Thanks.
This has been the Real Estate Underground podcast, a Clark Street Capital presentation. Thanks for joining us. If you're enjoying the show, please remember to subscribe and share it with your friends. If you'd like to learn more about Clark Street Capital and our upcoming projects, please join our investor club at clarkst.com/join. Until next time, happy investing.
This has been the Real Estate Underground. Don't forget to subscribe. It helps us grow. Until next time, Undergrounders, remember your real estate journey begins with a simple step forward. Now get to it. Bye for now.